Market movement there. Curious about that. Oh man. Oh man. Should be fine. Change this one to whoa. 1 hour. All right, we're gonna kick this off with a little morning prayer. Father, in Jesus' name, we just ask that you help us out here. Actually, just forgive Forgive us of our sins. And ask that you help us with our trading. Give us good insights to the market. Fill our day with your love and peace. In Jesus' name, amen. All right, let's get situated here. Let's try and mark out our times here. Boom. So it looks like our low is going to be right there. So we'll just tackle that now. Low here. We can take this one, bring that down, easily done. This was the high. The high is going to be somewhere in between there. It can be. I'm sort of okay with. Let's see about when. So really the highest point was that, so we're good there. We're gonna go ahead and move our, I don't actually know exactly where that was. The high for yesterday, that doesn't make any sense. Okay. Do we move it on accident? Well, anyways. The high for yesterday was there. We're going to take this. Oh, I see. This is when the market opened. Previous. It doesn't really matter. We're just going to put this here. We'll live with it the way it is. Not going to worry about it too much. So it looks like our zone will be somewhere in there. Let's go ahead and fix these. So I'm kind of curious on how that differs. You know what? We are going to do it. We are going to put this down to right here. I mean, that's how we had it set yesterday. So that's how we're going to set it today. All right. And our low. This is here. Boom. That's all set. We're gonna move our low up here. Boom. Oops. We'll move this up here because that's where that's going to belong. This is in the correct spot. Red needs to go down there. Green can come up here. We're good there. We're gonna go ahead and go to the 300 tick chart. We're gonna go ahead and get this over here to the 5-minute. Then we will wait. This isn't going to matter. We are going to put this to the 15-minute. And now we just chill out and see what is going on. So actually, this will be the 15 minutes leading up to. What's the sale volume? It's 105 greater than the if it's greater than that, you'll receive so it's only like 0.3% a day. About right. Interesting.
Just ends.
And you on your stop losses, Tiger, if you would like to take a trade, let's say that the demand zone low down, you get your reaction, would you then what, position it below the demand zone? How do you work that?
Well, ultimately, I'm chasing those unfilled orders in this area. So yeah, I like to see the price manipulation happen here, because whether it's the banks or the retail traders, I mean, you know, this is just as an example, they push price upward. Well, they're going to be placing their buy orders and typically dropping their stop loss down here. Opposite of a buy order is a sell. So
no, I mean, if price were to get eventually into your 4-hour demand zone, the green box lower down, or that zone.
This one
Once
here,
you get a reaction, would you then place your stop loss below the zone?
Oh yeah, absolutely. I mean, I would just do something like this and just.
Gotcha. And what then? Aim for new highs, or just
You're right.
favorable risk reward?
Yeah, just go for the swing high. I mean, if I just use that one as an example,
Nice.
assuming we get a 15-minute bullish candle with a volume spike, we've got a risk of 65 pips, let's call it. 6, 12, 18. So that's about a 3.5
Pretty
to 1.
substantial.
3.5 to 1 risk reward. Now, yeah. So that's basically what I'd be looking at there.
Gotcha.
Once it gets to about a 1-to-1 or a 1 to 1.5 in my favor, sometimes I'll go ahead and move the stop loss to break even, so I get my cup of coffee. Worst case scenario. Just it kind of depends on the structure and the economics at the moment. But yeah, if it's just barely in my favor as far as a bullish bias on this one as an example, then I'll probably do that. Or if we're getting close to a major news event or something.
Okay.
But if we've got smooth sailing as far as the euro and the Aussie dollar not having any reports coming up for a couple of days or so, then I'll just let the pure supply and demand do its thing, and I'll just leave my stop loss, leave it put, and not touch it. So yeah, it just depends on what reports are coming out and kind of the way the price action's forming. So
that's what it was. We had.
But yeah, that's what I got for euro Aussie dollar, and then
615. That's what
else I got here? NASDAQ and gold. That's really, I mean, I know I'm on here for the Forex piece, but that's a couple other items I'm watching. I won't spend too much time on those ones, but NASDAQ.
Tiger, we got a funny comment here from Robert, which is generally with us in the morning.
Yeah.
It's like, what the hell? Troy is so good, he has time to play solitary on the top middle monitor while he trades.
that is
Picked
not.
up, Robert. He's sitting there with a.
That's not solitaire. Okay, that's a Forex panel. Every one of those little squares is a Forex pair. So yeah, that's
a solitaire.
Yeah, sure, solitaire.
Sorry for interrupting that, Tiger.
Oh, that's fine. Yeah, actually, I originally had NASDAQ on my watch list this morning, but when I refreshed, it actually fell off. So no longer at the moment am I looking at NASDAQ. It's more of a neutral bias. So something must have changed. It was probably the CPI reporting might have changed it. So yeah, I'm going to ignore NASDAQ. But really, the other major one I'm watching right now is gold. I mean, gold's obviously going to be flip-flopping with every tweet that comes out.
Yeah.
So let's see here. I'm going to go find my gold chart real quick. It's a USD. Yeah, so let me see here. So I got my Fibonacci levels up. Zoom that in a little better there. Yeah, I was telling the guys on my stream yesterday, I actually had a perfect demand zone set up here last week. Daily, so my daily in yellow and then my 4-hour in green. Price touched it and then just flew sky high, but I was asleep and I missed the trade.
Wow. No,
so yeah, just a perfect example of the power of the well, you know, for me personally, having a 4-hour zone within a daily is just a good confluence. That's what I'd love to see. So perfect setup, but I missed it. But other than that, I did have a demand zone set up here. It's one that I did not take because I don't think I actually got a bullish. Yeah, I didn't really get a bullish 15-minute candle within that zone. So that kept me safe. That kept me out of a trade that I would have lost if I'd have just set a limit order, right? So perfect example of why I don't like setting limit orders anymore. I like to be on top of it to watch how price reacts. So yeah, so that one kept me safe. I think that was my main ones. I do have a few others I'm going to be kind of checking on as the stream goes on, but But yeah, Canada, Japanese yen, Euro, Aussie dollar. That's my immediate favorite.
Nice.
Yep.
Nice.
And I'll share this for you.
Thank you, Tyler.
Uh,
And we also got a good morning there, guys, from eShine Official. Good morning, good morning. Don't recognize your name. Welcome, welcome. Robert's our usual suspect in the morning before he goes to work.
Suspect.
Troy, what are you going to show us, bud?
Let's
yeah,
go.
Sure.
All right. Sorry, I'm just all self-absorbed.
All right, let's see if I can figure out how to use this sharing
Opening
software.
market.
So I hit present, is that right?
Yeah, present and then share
Present.
screen.
And then share
Then you can
screen.
select which screen you want.
So what I've been doing
If you've got multiple
is
monitors.
I have this
Does it
orb.
highlight which monitor
One of
you're
these
showing?
two is the one that I really
That's
watch.
the actual.
There'll be a lot
What
of
is this
tabs
one?
there, and you just select the one which you want to
Yeah.
share, right?
This is the one that I use the most. Then what I've been using is this fixed range volume.
Okay, all right,
And kind of
okay.
looking at that. So this right now is making the 15-minute orb, and I've been watching the volume specifically within
Okay.
each of the 15-minute times.
Hmm.
Just kind of
you see
seeing
You
anything?
just popped
what
up now, so I'm
kind
backstage and I have to add you. There we go.
There it comes.
volume is happening.
You're
I'm
live.
assuming. and I could
Okay,
be
so
completely wrong,
this is a daily
this is a
chart
little
on
work in
the
progress
ES, the
that
S&P.
there's more selling going on. Like
I
let's
call
just
it the
say there's
large
more red,
contract,
so there's more.
It's
there was more
actually called the
sales
mini,
at
which
that
makes
time
no sense to
at
me,
this
but I guess
area
there's
than
even
I
a
was
larger
buying.
contract above the
I'm kind
mini.
of just seeing
Mini and macro,
what is
micro is what I
happening
trade,
right now.
and
what is the business.
this is really
Like,
scrunched up
that's
so that
basically
you can
what
see a long period
doing
of
right now.
time, and we've kind of got this long-term band of price consolidation.
Yeah, we're unlikely
It goes back
to
into last
actually
year,
trade on that other.
and we are sort of finally
one
getting
that we're trying
back
to pass.
into that band,
Oh.
and we've also got another
So we
little,
kind
I
of left
call
it the way it is.
little
I think we
bull
got
flag.
a little
So
bit. We'll
here's
just
the
do a quick recap.
the flagpole, and then here's
yesterday,
the flag
I think
here.
we made like 38.
And normally on a bull flag, at least
then it was like 80.
my experience has been a bull flag breaks to the upside if you're in a
basically 2 times
long-term
each of the way.
uptrend.
You know what I mean? Well, 'cause this is like
that
1x,
seems to be the
right?
propensity
Top one
of
is 1.
a bull
next is
flag, and a
2,
bear flag, then of course
3
in a
micros, 4 micros.
downtrend
That's how
will
we have it
break to
set.
the
Anyways.
downside most of the time. So I'm looking for this to break to the upside, even though
grab
we're
that real
in this
quick.
price
And we ended with-
consolidation band.
We took
from
this range right
previous.
here. I don't know. if we can
However,
show it.
I think that
Took
we're
a
in
really
this
good trade
big
yesterday.
price
show
consolidation
you
band, and
where
will
we
probably
took the
continue
trade
to be in it
at
regardless of the shorter term pattern, even though it is bullish.
Yesterday.
Also, we are now above the 20, the 50, and the 200-day moving average. I don't really buy into the moving averages
there it is.
as
So we
like who
actually
decided the
caught
20-day
this
or the
movement right
50-day,
here.
or
So we were just chilling
who
out. We've
decided
seen this
that.
come down.
And there's
pulled
really
up,
no research to
boom. We
support
took it
it.
all the way down
But
to,
it's
I think,
something that
here,
everybody
'cause I just
believes in
figured
and
that
looks
it would
at,
bounce
and
there.
so
But then,
therefore
just
it's
kind of bounced through
kind
and
of
get any more after that.
psychologically
That
projected
is what we
upon the
took
market.
yesterday.
Yeah, it's sort of an accepted. So if we're above the 200, they'll say, "Oh, we're in an uptrend," you know.
Yeah.
And you can
Let
see
us
that there are
just
times when we're
continue
like
on.
here, where we are below the 200
Something we
moving
started
average.
looking
But
at
if you
yesterday, so we don't
scroll
know for
back,
sure
we're still
what
in an
we're
uptrend. But
going to go ahead
so
and
that
see.
anyway,
if
my
it's
point is
anything. We
I
got
like to see what
15
other people are thinking.
minutes
And if other
for the
people
orb to
see
be
the
created.
20-day or the 50-day, we're coming to it. Oh, they're going to be looking to buy against that moving average. So at least I know what the technical analysis people are doing or thinking about at least. Same with Fibonacci. I mean, this Fibonacci,
that in there.
you know, it works so often that you have to go, hey, there's validity to it.
That's interesting.
But it's,
Boom,
you know,
right?
is it that
Yep.
projection that people, that
We'll bring it
self-fulfilling
down
prophecy
to right here. Actually,
of
that's it right
people
there. Boom.
believing that this is what's going to happen here,
And
therefore
then right now
they
we're
do it,
looking
and
at
that makes this massive
as our
psychological
range.
impact that creates these moves in the market. Now,
So we're
I
just gonna
will
kinda
give you
watch
that
to
the
see
Fibonacci
what
at least
volume is
has
doing. We're actually
some
not even
math
watching
behind
We
it
should watch it.
versus the 200-day, which
So we got
has
a lot of
no
sales
math
happening right here,
behind it,
and
right?
then- so interesting.
Also, of course,
so the
Fibonacci
selling
is,
happening,
you know, a ratio that's
And then it just
inherent in our
stops.
makeup.
That's
It's in
interesting.
our brains. It's in our, this ratio from my hand to my
I'm
elbow.
curious about that.
You know,
Nature
Now
to
my
we're
shoulder.
creating more
This is
volume up
this is
here at the
Fibonacci,
top,
right?
So
So, it's
Let's
built
figure out
into
what's
our
going on. We
brains.
do
It's
have
built into our
news
bodies.
that
You see it in,
right now,
I love the one that shows the spiral of the galaxies,
British.
or
in
the
the
spiral of the, the
Forex
snail
flowers are all down
shell,
right now.
right, and the
Yeah,
flowers.
We saw the
Yeah.
US.
How that's all, how
the
those
sea.
ratios are built in.
It's a mixture
But
because there's like
all of that being
USD,
said, I do think that there is
CAD. And
there's a lot to be said for understanding how the crowd moves,
make sure
how
back
the
and
crowd
forth.
thinks. I have a book that's called Trade the Trader. I don't know if you guys have ever heard of it, but it's all
Interesting.
about how
Anyways,
to
we're gonna go
anticipate
ahead
what
and
your
continue
neighbor's
watching this.
doing
We will
versus
go all
what
the way to 39.
everything else.
What I also
Everything
like to
else
do-
is
here, I'm
doesn't
gonna
matter
move
if
this
the
over here
if the
first, so-
crowd thinks we're going up, we're going up, right? And I think I've kind of gone back to that thinking because literally
good.
with Trump tweeting every 5 minutes, it's gotten chaotic.
Yeah.
It doesn't matter what was happening 5 minutes ago.
No.
It's what's happening right now. And
All right. So so far that's
so,
our range. Oh, so what I like to
I
do
think that we're in
here
this
as
price
well-
consolidation band, and we're going to continue to stay in it for an extended period of time, maybe throughout the entire summer.
Okay,
Obviously,
I'm not
these
really
are all-time
seeing a
highs
whole
back
lot. I do
here,
see a lot of
and really to
volume
get going
on
to
right
the
now.
upside to continue, we've got to break above those upside high and
So I
have a
like using
nice
the
little
volume
breakout to the
profile
upside.
here. I'm just gonna
And
draw
for
something out.
for
Doesn't
my
really matter,
mind, for
'cause
that,
then we go
going
over
back
here,
to
we
Tiger
go-
talking about
and we get to
fundamentals,
just
the
do
fundamentals
our
are not
boom.
pointing in that direction from a macroeconomic
630,
perspective. So
0,
it would surprise me if we could get up to here and test it and then actually break out without
0,
something major changing the fundamentals.
That'll actually just
And that may happen. We're starting to see some of the Fed governors
doesn't really
starting
look
to
the same,
waffle
so
on their
no.
unanimous
Yeah,
decision,
it's like
unanimous.
right? And
unnecessary.
yesterday was it Goolsby that was talking, and that all of a sudden now he's thinking, oh, maybe we need to lower rates. Maybe we need, it's like, really, dude, are you kidding me? I mean, you've been screaming data dependency for a year. And now all of a sudden, we're not going to be data dependent. We're going to lower rates.
That's now 2 of them, right? I think 2 of them that are on that bandwagon.
Oh, there is. I don't remember the other one.
All
but,
right.
Omen or
So
something?
last time
Yeah.
there was some really good clear indication.
it's like
me,
if you're going to say you're
anyways.
data dependent, then you got to wait till the data comes out.
Uh,
Otherwise you're just full of it. Of course, that seems to be the American mantra right now, is to be full of it, right? Normally, as Richard knows, I was in a group with Igor, and these guys were peppering me with American questions. What's going on over here? But Tiger, obviously, you're in the Central Time Zone. Is that right?
Yeah, I'm in Kansas City.
Kansas City. Okay, you're in the heart of the nation.
Right in the center. Right
in the center. So everything I'm saying is not gonna. You're gonna be going, definitely, because whether you're left or right doesn't really matter, because in the middle is complete chaos.
Yeah.
Right. But anyway, going back to the chart here, I every day that I thought for sure when we started bombing Iran that the market would that was the excuse the market needed to finally kind of realign with the fundamentals, but that is not the case. We have been a buy the dip scenario.
Look, Troy, just to interrupt there, I mean, this all happened like within just over the weekend and a few days, right? So it might still happen, right? Because you got now this truce between Iran and Israel. Now Iran's already saying that Israel's broken the truce, although I've not seen that is the fact. Or is it a fact? Who knows what's going on? But like you said, anything could happen within like next 5 minutes. We get a tweet that the truce is off and they're bombing each other again, and then maybe it comes to anything.
Yeah, actually,
I think that Iran is operating from a position of extreme weakness.
If you're in
And so
profit,
they're going to bluster as much as possible. They're going to say,
put
"Oh,
some
we're
stop
going to,
losses, man.
we're going to set off the world on fire," because they're in a position of weakness. That being said, if all they need to do is send one ballistic missile into the Strait of whatever I can't pronounce it. Hormuz. They hit just one ballistic missile, just do a flyby, and oil is going to go through the roof. Okay, right? And what happens? So let's step back away from what happens if oil goes to $100 a barrel. Even if it's in the short run, what is that repercussions? How does that affect the rest of the world? So we instantaneously, every country in the world just has inflation, and it may be on a large scale because energy prices, as you know, are the core of everything.
Okay.
I mean, we can't do a service in the United States without spending some sort of
Not
energy.
a whole lot, though.
You
But we
can't
do see
farm.
that
You
it's
can't build
mostly
an
up here at the
automobile. You
top.
can't do anything without energy. So we get this
So
core
my question
energy
is
inflation
this
piece that
feeling
instantaneously goes whoop. Now we're, it's
the
5%
amount,
more,
or is this how,
10% more for
this
energy.
line from
That
here
is
to
going to
here,
filter through.
the amount of sales? So, because that would
If that
indicate that
filters
there's
through,
more,
what's the Fed have to do? The Fed
more
has
buying
to
right here than
slow
there was selling.
demand, right? How do we slow demand? We increase interest rates, right? So interest rates go
So
up,
what this
demand
seems like
goes
is we're probably
down.
on an uptrend because there's nobody
they start to
stopped,
get price
nobody
stability because
bought
there's
down
less
here.
people buying. If I've got 100 cars I've already
selling up here, it
manufactured,
seems
I need
like,
to
so
get
it's
rid of
just
them.
gonna
I'm going to
tank
lower my
back into
price.
here,
The
maybe?
whole thing starts this giant
Got a
domino
possibility.
effect.
Let's see. See, now
and then
you
we're
have
back
some selling
below the 200-day moving average, and maybe we're going to go and retest these lows from April. Certainly certainly
like.
is
So that just
perceivable.
absorbed though. So I think
and I don't know whether
it looks like they're overpowering the
didn't
sales.
Trump
so
make
this
the
might be
statement,
just like
if you bomb our troops, we're going
more
to
sales than there was
escalate
buys, and this
extreme.
is close to. That's
well,
kind
they
of
did.
like we
They
just
bombed our
seen
troops
red
in,
disappear here. So
in
I'm assuming that there is some
actually.
sales
yeah,
in
in
there,
Qatar.
but then
So I'm just waiting for the.
So this isn't really
it's always
show
tit for tat, right?
the
So where's the response from the U.S.?
amounts, maybe.
Again,
Maybe
the
is there a
back
way
and
we can
forth.
see how much was?
It could spiral out of control very, very, very quickly.
Eggshells.
Oh no, we're looking at the wrong thing.
And I think that Trump actually may, and I say this optimistically, may understand that that the oil piece of this puzzle.
So the delta is going to show the difference.
Could be detrimental. That's why he came out yesterday and said, "Drill, baby, drill." Right? Let's do everything we can to turn those spigots on, so that we can control our energy cost. Anyway, going back to the chart, I really think we're in a sideways, very volatile sideways. We're not going anywhere in the short run. We've got a couple of high volume nodes that are near and around us. Of course, a high volume node is a place where there's been an extreme amount of volume. These are places where the market is happy to be. That's where a place where the most number of buyers and sellers can actually transact.
Those didn't
and so
change.
we've got a
this
big
is the sell
volume,
delta.
a high volume node right here below price.
Let's take a look at
but it's kind of in the middle of this muck. But then we've got two others that are just above it. Those are going to be resistance on the top side.
Kind of seems
and on the
like
bottom
what it is.
side,
I'm
we've got
leave this
a couple
here
of nice sized ones as well. So we're sort of pinned in volume wise.
All right, we just
band.
finished our 15-minute
and
orb.
I think until we either,
then what I like to do is I like to take those in the 15-minute increments. We're going to go ahead and plot out our 15 minutes.
They've kind of got Iran by the short hairs. They've got them to where they can fly over there and virtually own the sky, which means they can bomb anything at their will. And the Israelis are not known to go, we have this advantage, but we're not going to use it.
Now we're just going to go ahead and take.
They're really not known for that, right? So,
We
you know,
will
I
move
can't
this
see this thing, a
to
ceasefire, and another thing, what does a ceasefire mean
45,
to the Middle East?
and
Not
this
much.
is actually
Not a whole
supposed to
lot.
be.
It means one thing and
49.
one thing alone. It means we're going
Apply,
to stop for 5
save.
minutes so we can
5
get
minutes.
reset for
Yeah.
the next round.
Reload.
That's
Yep.
exactly
Right.
why, you know, I'm so scared to trade oil at the moment. It's like, what's going to happen? You know, any given moment, like yesterday, we were sitting here watching crude oil all of a sudden start dumping after that gap open Sunday. You know, yeah, it is.
All right,
it
just
is
so we
scary.
can see.
So Trump did drop another truth just recently. China can now continue to purchase oil from Iran. Hopefully they will be purchasing plenty from the U.S. also. It was my great honor to make this happen.
Right.
30 minutes ago.
Here we go.
I mean, I don't know what you say. You know, I actually turned the volume down because,
Stop watching the news.
yeah. You know, the downside to that is that you're sitting in a position and everything's great, and all of a sudden it either goes up and it takes out your target, and you go, yeah, or you know, it goes down and takes your stop out, and you're going, what the frick happened, right? And then you go back to the news, you turn it on, you're going, oh man,
That's what happened.
Oh, yeah.
right? You know, but the thing is that it doesn't really change.
What's
For
gonna
me, it
happen
doesn't
here?
change where my stop is. My stop is my stop.
Are we going to take the all-time high here?
You know, even having the news
This is
on.
the month, and it
and
looks like
getting
we
sucked
are
into
at
that,
the all-time high. So I feel
you
like
know,
we're probably
I don't know what you wanna call
maybe.
that, but
Yeah.
the hysteria of the news. It doesn't really change. If I'm long, I'm
On the
long. Here's
month,
my stop.
It
Here's
looks
my
like we
target.
could
Right?
maybe
And you know
be
what?
breaking
And
above.
so, like me, that's the
Let me
first
take
thing
a
I do
quick
in the
look at
morning.
week.
I'll take just a quick look at the news, just to see what the retail traders are going to be worried about, because quite often they're going to be doing what they do and pushing prices into a zone I like, so I can take the opposite side of
So
it.
let's just assume it's like this. It could
That's
be
really
breaking
that's
up.
what I love about just seeing the bullet points
It
of the
could
news.
break up.
Definitely don't make trading
Not
decisions off of it,
necessarily a
because I
hold
strictly
down.
do it off my
Doesn't look
fundamental
great.
reports and
It's
sentiment.
not
But
very.
quite often they're going to push price into a zone where I'm going to take the opposite end of it. So that's really, I think, the only beneficial part of it is just using that for fuel.
Right. And lately, I'm a scalper. When I hear you guys talk about 4 hours, I'm like, dude, man.
Yeah.
I've done 12 trades in 4 hours. You know, it's a different way of looking at the market, and that's one of the obvious advantages of having multiple
So, if I was
styles
to make a
of trade
guess,
in a
as
trade room,
we
is to
do-
be able to see those different styles.
Yeah.
But
I'm thinking.
you know, I find that
possibly
revision, the
we're gonna take
revision
that
to the
all-time
mean,
high.
reversion to the mean is the trade right now, at least on a scalping perspective. So I mean, when I see the S&P jump 20 or 25 points in a relatively short period of time, I'm going to short the top of it, you know, and it's going to pull back somewhere. But the moves are so extreme that you don't have to get the full reversion to the mean to make money. If you just hit it at the top, put a stop above that high, you know, you're going to get at least a 50% retracement to the, you know, to the mean. And sometimes you get the full mean and it goes the other way. So it's been, I have expanded my stops a little bit to a little bit bigger stop in order to take some of those revision to the mean type trades. And I find that,
So it broke
you know,
above.
I'm using
It
order
came
flow to,
back
you know, I
down
see the
below.
spike. Well, the spike happens, order flow
What is
is
going to
useless.
happen here?
It's
Are we
moving
going to
so
gonna
fast
move back
you can't
up?
read it. But you can start watching as it gets to the top to sort of see where it starts to slow down. So it's slowing. Then I'm going to short it, right? Or go
We're
long
getting
when
close
there's
to news,
that little
which is
lull
gonna be
in the initial panic,
EOE.
in whichever direction it
We
is.
got
So
Fed
that's been a really good
chair
trade for me this last 2 or 3 weeks. Has
7.
been the reversion to the mean. And
So Powell's
sometimes
speaking
it's
at
I
7.
can show you some trades where it's
Consumer
10
confidence,
seconds
a lot
and
of
I'm
stuff
up,
at 7.
you know, $300 and I'm like,
I
yeah,
guess, we just chill
you
out.
know. And other times you're
'Cause,
wrong and you're down $300 in 10
that could be
seconds.
crazy.
So I mean, obviously volatility is a two-edged sword.
Right.
Now the
So
other thing I was
If I
Are you
was
going to show the
go off just off
NASDAQ
the
there? Because I
technicals,
just
we
wanted to
came down
see
up,
how
but
far is the NASDAQ
under
from all-time highs?
Whatever this is. I don't
Here's
know
the
what that is.
NASDAQ. I don't the NASDAQ, I don't have any I haven't drawn anything, but there's the highs.
That's right.
We're way closer to the highs
On
on
200 on
NASDAQ
the
versus
50,
the
we're
ES.
touching.
We do have a
The
little
500 tick.
two little highs here.
Order
Obviously
filled.
Are going to be
This sell.
resistance
Order
points.
filled.
When we come up, we get a little
See
double
what
top
happens.
into that, and then we have another
See if we can't
minor
get
double
a-
top, or a major double top right there. You know, the
Break down
NASDAQ
into
traditionally leads the ES.
the bottom.
That
Let's just
being
see.
said,
Let's just see.
you know,
what's gonna
we've
happen.
seen it's in the same band of
Because of the news,
you know, it's in the
they could just
exact
wipe
same
this
band
out. Boom,
as
boom.
the S&P is when it comes to this, you know, area consolidation. You know, and it does also have a couple of high volume nodes. It's not as prominent as the ES,
See
but
that?
there is a high volume
See
node
that
or
little
just at
craziness?
it. But then once we get above here, the volume drops way off. So this thing has the power, I think, to really shoot up and even take out this all-time
Stop
high.
filled.
Versus
filled.
the S&P
right.
has
I would think
definitely
that a
got
little
some
bit.
resistance.
We could have stayed.
So I mean, you're watching. Yeah, I trade both of these and I use them in tandem.
Let's see.
So
It'll probably
I'll
go
use
down here.
one as a leading indicator to
When we
trade
get
the
back up
other.
to here, we'll probably jump back in.
And there's definitely days when they
Let's just see.
diverge,
Would
and
we have
that's
reached
kind of
the
interesting. But
Yeah.
again,
Would
we are
have
above all the
reached
moving averages
bottom?
on the
Is that
NASDAQ as
what
well. Very
the
bullish. This
target?
is, you know, this is starting to look like a little a breakout of the bull flag.
Yeah, might get a little pop to run those highs, but you know what's happening? Going to happen after that. So you're going to be follow through. Obviously, time will tell, right? We also have Chair Powell testifying in about 7 minutes.
That's right. And
Wow.
he can
To
change.
get way off.
Yeah.
He can change the whole landscape,
It all.
right?
Yeah, so I don't
If
know if
he-
I want to trade the NASDAQ at the moment, but yeah,
No,
there we go.
Well, normally
What
I'm.
I'm
Let's
gonna
back up.
trade today.
Let's see what else. So those are the two main things that I trade. I'm obviously a day trader, and so a scalper. So it's very common for me to do 20 to 50 trades in a day. So
looks like we.
you know, this is
had a lot of
very
sales come
macro.
down,
Looking
sell,
at daily
sell.
chart is just I try to get
It's
a
kind
lay
of
of the
rough
land.
because it's
Where-
news. News
where's
is happening.
the propensity of
on its way.
direction to go.
And now I kind of
You know,
want to play
and I think
around
we're
with
coming
this
into some
delta
serious
here.
resistance. And so I'm going to be looking for tops.
More sales
I'm
in
looking
this
for
area.
double
All the
top
buying
and
is
double
happening
top.
up there,
You know,
which
those two highs
means
right there to
somebody's
be
getting out.
retested
A lot of
as
people are getting
potential,
out
at least the
basically
first
here.
time to it as an opportunity
And the
to
fact that
short-
it's kind of
short run.
chilling out.
Obviously, that's going against the longer term trend. But
kinda
that being
cool.
said, a scalper
Meaning
is
the
a
big money. Look at how
contra-trend
much
trader for the
big
most
money
part.
is just like,
You know,
boom,
any
we
kind
just
of
swallowed that
movement
up.
in a direction is an opportunity to
Yeah.
go the other
Or the
way.
retail sellers just swallowing it up.
So that's
But
kind
it's
of my
interesting that
take
there's
on the
not much
NASDAQ and
volume
the,
movement.
ES.
And Troy, just quickly
Let's
there on
find
the
out,
NASDAQ, while you're
actually.
there. So that's the September contract, right?
Well, not necessarily true. Let's
Yes.
see, we had a lot of volume.
And if
boom,
you look
boom,
at the
boom.
continuous contract,
Big
because I
volume.
pulled one up. I don't have a live data.
Small
for the
volume moved a
futures,
lot.
comparing the
This moved a
CFDs,
lot for the
CFDs
amount of
here,
volume
Toyota Prime.
that transpired.
That's already pipped that
That's kind of
first
like
lower
what we're
high
looking
after
for.
that high that was
All
set
right.
just before.
So
this
let's
year.
just see.
What
What
you
is
know, how do you
going on?
deal
'Cause I
with
have no idea.
that? I mean, it's
just
very
trying to
it's
figure out
much
what the
closer than
market's
the
doing.
actual front
There is-
contract. And
we
you know
noticed
how
how
do they
much
splice
volume
those
just
things
kicked up?
together with the historical contracts and stuff when they run
How much buy volume?
the continuous contract. You know, this is a question I also
So
had
the
the
buy
other day,
volume
so
is
obviously
happening.
you being more,
Okay, now you see
I
how
would
much
say,
this moved
experienced on
up
the future side of things.
with these
You're
small
not gonna
amounts.
like.
Cool.
You're not
Up
gonna like.
on the continuous contract, and it's already just tested that first lower high.
You're not gonna like my answer.
No, please tell me.
I used to be a big fan of the continuous contract, and I
Yeah.
used to follow it fairly regularly. However, what I feel like I've deduced over time is that the market doesn't have a very long memory.
Yeah.
And that most of the volume is happening on the front contract, and that's the numbers that everybody's watching and trading off of. The continuous contract seems to be kind of a baseline that will go, oh, I want to when I want to look at really, really long term, I take that into consideration.
All the way to here.
And so I don't even look at it anymore. I used to look at it, had
So I
one
think
chart that was just
it
continuous
probably
contract.
come down.
And
It might
I
look
don't
like it's coming
even
down to at
look
least
at it
the
anymore. I
bottom
look
of
at
the order.
strictly, and
Let's find
it's
out.
weird because
I don't know.
obviously
There's a
on
lot of wicks
a
happening
rollover
here.
week, there's a significant difference
suggesting more
between the price
upside.
levels.
Yeah.
If
Look,
you
the-
are
another
gonna wait
reason
for
why I'm
news to
asking
happen
this,
just
because I've noticed a lot,
because we have to
especially in
get
the past,
used to that.
If you were to draw, let's say, any market geometry lines, channels, pitchforks, whatever, you do that on the continuous contract, might look like, let's say, price is hitting an angular support
We're
resistance.
not going to trade this side.
And sometimes
it.
it doesn't, and it reverses all of a sudden.
We're gonna
They draw
be
those same
in
lines on the front contract.
the
and
mode
typically, price
as
would have
if
reached it, or
We
Vice
Did
versa.
you see that?
So it's
What
definitely
just happened?
beneficial, in my opinion, to look at what the front month is doing, especially if you're doing, let's say, drawings and all that sort of stuff on it. I won't say it always happens, but I've seen it enough happen that it's probably worth, if you do trade futures, I mean, for the guys out there listening, that you perform your analysis on the front contract as well, rather than just using the continuous contracts, if that makes sense.
So
Yeah.
I'm gonna flip this around and ask you a question. Okay.
You
Well,
do.
first I'll get to the question, but here's the rub. Why would we use the continuous contract, which pulls out time premium? Because time premium is part of the front contract, right?
Mm-hmm.
And it's part of how it's calculated. It's part of how it's valued.
Order filled.
But
Order
if we're
filled.
going to use the continuous contract, we're going to go, we're pulling that out. And it's almost like so here's my question. Here's my question. Do you look at, when a
Sell side.
report comes out, do you look at the core retail sales or do you look at retail sales?
I personally look at the core.
But the core pulls out all this extra data.
And
And
is
so,
this the thing? If you would go read that, let's say, report that comes out on the, I
don't
don't know,
like
let's
all
say
these
Forex
wicks,
Factory,
though.
for example, you go to CPI data or core, whatever, they'll say this is the one they actually look at, Although, is it the one you should be looking at? Because that's what they tell you. I've no idea, to be honest.
well, okay, so this is where I'm going to diverge from most people. I want the maximum amount of data.
Yeah,
I don't want
including-
I don't want you to cut this little portion of data out because it's an anomaly or whatever. I want that anomaly in the data. I want the pure data. I want all of the order flow. I don't want just a little bit of the order flow. I want all of the data. And so I believe that core is another word
Stop
for
filled.
BS.
Stop filled.
Okay?
There we go. That would have been
Because what they're
one
doing
full
is like
trade.
when they take core CPI. Okay, so they've taken
Which
core
was
CPI
nice.
and they've excluded energy, food.
Food.
Let me tell you why
Now,
I took that.
let me tell you, if you take out
the
energy
fact
and
that
food,
it jumped up and then
who
immediately
cares?
it came down.
Because my
almost makes me feel
pocketbook
like
is spending
somebody
money
jumped up
on
and then sold it
energy.
all.
Energy and food.
food. So
Exactly.
taking that out of the CPI is
And
complete
necessities.
stupidity. Because
Just
my
about
inflation rate that
7
I'm
o'clock.
experiencing, it includes energy and food.
Yeah.
So I believe that when economists pull numbers out in order to help smooth the line, they take out the volatility pieces, they're not getting a true picture.
Yeah.
That may be a true picture on a very
See
long-term
what happens
trajectory,
now with,
but in the short term, it's not true. It's just not true.
Trying to make
so-
something bad look good.
I'm sorry if I step on anyone's toes, but
No, not at all.
core to me is another way of saying we're gonna pull out all the stuff that really matters to the person who's experienced inflation.
Yeah,
Right.
I always thought that was a joke too. I mean, I pay attention to both, but yeah, I always thought, well, yeah, who cares? Like, what are you spending? What are we spending our money on? Yeah, like you said, food and gas. So of course I want to know that.
Gotcha. The
That-
stuff that hurts the pocket.
Well, I don't know if you could hear that little
See if we can
Yeah, that
fix
sound.
that.
sound
Oh,
in the
what
back.
happened?
That's
We lost,
for Financial Juice telling me that the CB consumer confidence is 93 versus the forecast of 98.8 or 99.8. I haven't figured out how to shut that annoying thing down, but
At least it's not an air raid siren.
yeah, very true, very true, very true.
So at least that's good.
Yeah, we don't get those. Well, if you're close enough in town, sometimes you will get a tornado siren.
Oh yeah.
That's not, and I'm sure in Kansas City you probably get those every once in a while.
Oh yeah,
right?
where I was born out in the center of Kansas, and yeah, we got a population of 3,000 people, not that many, but yeah, they got 2 gigantic alarms that go off if there's a fire, and we used to live right next to it. Scare the crap out of us every time.
Yeah. Can imagine.
Yeah.
We don't have that sort of stuff here, so we're lucky that.
That's all I've got. How do I stop screen share? There we go.
Yeah.
And I obviously got off on a tangent there. I'm apologizing.
No. Great insights there, Troy. We appreciate it. I'm sure our viewers appreciate it as well. I think let me just go over my analysis quick. There's really not much happening or no trading opportunities, but
occasionally that happens.
it is worth showing what I've got.
So it's all good.
So I typically look at a 5-minute and a 1-minute time frame. So like Troy, I like my scalping strategies. I think the longest are hold trades, generally anywhere between a minute. Longest I think I've held them were using this particular strategy, 20 minutes, maybe if things go slow. So what you're looking at here is basically the day split up in sessions, right? Asia, London, and let me just go to yesterday. This is a really, really good example of what it is I'm looking at here. This being on the NASDAQ now, right? So the morning sessions I like to split up in 3 90-minute sort of periods, and the afternoon sessions as well. I don't know if you can see these sort of darker color blocks in the backside here. But what I'm looking for is basically liquidity sweeps, or liquidity grabs, as some people might call them. And then also, Troy, you were talking about divergences between correlated markets, I believe you were saying. So if I look at the NASDAQ here, I'll bring that up in just a second. I typically want to see, let's say, price in the morning session, either take out the London high or low and give me a reversal. But that's typically not the session I like to trade. I prefer to get involved around about the 9:30 a.m. mark when the New York session starts in all earnest. And yeah, we have a really good example yesterday. There was no news event here. I would call this manipulation. So price takes out the previous 90-minute session low, again underneath the London session, and we have one heck of a strong move all the way back to the upside. Well, yesterday, while I was presenting, I didn't get into this trade. There were fair value gaps in a smaller time frame. The prices ran away. I couldn't get into it, so unfortunately, there was a miss for me. Although I did read the potential manipulation and then followed by distribution pretty well. Now, I do like here on the side, and there's actually indicators for this, but I found them to fire off too late, so they're lagging quite a bit, is to then spread against the NASDAQ, the S&P 500 in price. Obviously, very highly correlated markets in what price action does, but there are instances when there's divergence, right? So in this case, during this previous, what I call the New York AM session 1, price then runs during the second session. This is a 9:30 a.m. candle on the 5 minutes. Makes a lower low. But what happens on the ES makes a higher low. This is what we call a smart money timing technique. So if that typically happens when you get a run of either a previous period, and like I say, I use 3 different periods during the morning, 3 different periods during the afternoon. And I found this to be a very good indication that you've got to be quite quick. That the market's getting ready to reverse. Whether that was a liquidity grab, sweep, whatever you want to call it. I just look at it as price running a previous high or low, or previous session high and low. And if you get this SMT smart money technique or timing divergence between highly correlated markets, you typically get a strong reversal. All right, so I won't say it's simple. You've got to be quite quick. Sometimes I'll go down to a one minute time frame. Let's just open that up. Maybe go to the same day. Let's get rid of that comparison over there. There we go. And you can see if you can spot. And I like using fair value gaps as well.
Mm-hmm.
In this case, inverse fair value gaps or inverted fair value gaps, like we got quite a few over here. Or there's one that formed on the way down. Let's color that red, was bearish.
Can we figure that out?
There wasn't really one over here. But as price ran at low, we had that SMT.
Is there predominantly more
versus
buying,
the S&P 500, and price broke, it became an inverted fair value gap, and that also is just another nice indication that price is actually getting ready to reverse.
Probably do that more on
back to the 5 minutes, and obviously there's nothing happening right now, so I'm just trying to give you a rundown of what it is I'm looking at here. Where we yesterday.
So Richard, are you buying on the fair value gap touch? Is that how you're doing that?
Well, you know, these days on the NASDAQ with the volatility, and so I mean, the NASDAQ's always been volatile. But
let's take a quick look at this real quick.
I'll explain, for example, what happened over here.
Like
but just to answer that question, I prefer to be a bit more conservative. If, let's say, a bearish fair value gap after a run, or what I suppose is a liquidity grab, and you get a reversal and it becomes an inverted fair value gap, then I would like to see price retest it or form a fair value gap in the direction, in this case a bullish fair value gap. But sometimes, like happened yesterday, boom, straight back to the upside. You know, you missed a beautiful move. You should have, could have, would have, or should you have pulled the trigger and just got in it?
Let's take a quick look. So all that happened right here.
So it's a difficult one. Some guys using similar techniques, as soon as they see an inverted fair value gap after a proposed liquidity sweep, they'll just jump in, you know, get involved.
Anyways,
this is a really nice situation over here. Although
we had,
and this is
quite a bit of sell
what I would typically like to do.
And then we jumped in here
to answer that question as well. It's like here was a bearish fair value gap.
We had
price ran those AM session lows again.
This volume looked
straight back to the upside, becomes an inverted fair value gap.
Movement
and these green boxes you see over there are basically fair value gaps. Ones that have not been broken.
So it feels like a little test.
And then wait for a pullback into it and have a waiting order, or see if you can get a reaction out of it again, and then get into the trade.
Nobody was buying.
But normally around this time, it's what, that's about 7 p.m. my time. I'm at home already cooking food for the family, so this would have been an entry all day long if I was here in front of the screen to actually trade. So yeah, so it's just I find just having that patience for prices to run these lows or these areas. We can fast forward to today's price action, and we're running sideways, right? I know Fed Chair Powell's also having a chat at the moment, or testifying as they would call it. So if I were to be interested in a trade here, then where's my path tool? Maybe I would like to see price run these lows and then maybe give a bearish fair value gap as it does that.
Who would have took that?
It doesn't always occur that you then get a bounce upwards and, you know, you get an inverted fair value gap.
Anyways,
but at the very
you
least,
got,
then
like,
see a
them
bullish fair
buying,
value gap
let's just say at $100,
form to the
$1 million
upside
worth,
after price ran those lows,
and there's
and
only
get into a trade like
there's a
that.
million there's
And it also depends on if
500,000
you've got a good R&R as
for
well,
$2.
risk reward ratio.
so you
So,
got to get
you know, depending on where you get in,
these
what do you
500,000
target?
people
So I don't
to
really like to use a static
sell
1 to 2.
you at this
I
price.
rather target, let's say, the London high. So if
You start
we would get,
selling
let's say, a run of
pretty
these
low,
lows,
starting to
and I see
manipulating
some
and
signs of a
getting going up
potential
and down,
reversal,
trying
and
to
it's
make
low
it look
enough
like it's moving up
for me to get in
order for them to start buying these up.
with a good R&R,
Boom.
at least, let's say, the London highs,
Then
you know, then that will be a trade.
you're gonna start taking
It's
your
just
other
very
$500,000.
dependent on, you know, is the
Everybody's left with
risk
$1,
reward
right?
ratio worth getting involved in a trade as well. So
So as you bring
that's
that
pretty
up,
much my 2 cents on the strategy I trade. You can
now
trade this on the S&P 5 with the
you
ES as
gotta
well.
get them to buy. So
I
you
prefer
start
the NASDAQ.
selling more and more up here.
And I quite
Boom.
often see
They
that
all
really
bought.
nice signs where you get those S&Ts
Then you gotta
at
start
reversal areas.
attempting
Very,
to get
very
them to sell.
And they're
You start buying a little lower.
this probably wouldn't have been a trade
You know,
because,
as
I
it
mean,
comes down,
it sort of
hey,
just
I'm trying to
stagnated a little
buy,
bit, and then
like,
we had to move to the downside.
you got your
compare
level
that
here,
to
right? Your level. Let's just call this the level.
What the S&P was doing,
You know,
it's very subtle.
So you
right?
start
It's
you
not
start
as
selling up
obvious
here
as this
for them to
divergence
buy.
over
Like
here.
boom, let's just say that. Boom, right?
One could
Start buying up
argue
here. Do.
if you had a
And then you start
magnifying
saying like,
glass
hey,
here,
I'll buy
the
like I'm gonna sell like
NASDAQ make a slightly higher high
20
there,
of them right here.
whereas the
And you know,
ES
20 people are
start
like,
moving
cool,
lower.
we'll just retrace. I can get in lower, so these
But
other
that's
people
that
start
would
buying.
been obvious.
boom.
I like to
Then
see
what you're
something
left
that's
with,
obvious,
let's just
that
say
really
we'll just
stands
continue
out.
to manipulate up in
After
this area, do the
So-
same
a
so-
thing.
level gets
They sell right here.
Can I jump
you
in
know,
just a second,
These people
Richard?
are like, great,
Yeah,
we're getting a
please
good
do.
deal.
So
We're
I
on the
love
way
that.
up. And then,
That
the retail
microanalysis,
sellers, buyer,
but
you know,
what that
retail
tells
traders
me
are
is
all
that the
that's left that
S&P
has
is
most
the
of this.
weaker of
So
the
now,
two. And so the way
the
I
market's
use that
not moving.
information is I'm going to short the ES and I'm going to go long the NASDAQ. Not at the same time, not at the
nobody's
same
buying
time,
up
but I've
here.
now chosen a vehicle to go long
It's just either
versus a
gonna
vehicle to go
stagnate.
short. So I'm shorting the weaker of the two and I'm going long the stronger of the two.
But you would only
So
do
how
that
does that
for a
work
few
at
seconds,
that
wouldn't you?
point,
Troy?
right? That's kind of like
Actually,
where
for yesterday, it was the S&P.
Yeah, yesterday, I mean,
what's
from
going
here
on
on,
right
it
here,
just gave a
actually.
beautiful run to the upside.
It was weaker, you know, than the NASDAQ. I was doing shorts in the, you know, when I had a short setup, I would take a short in the ES, not a short in the NASDAQ.
So
Even though the
buy
same
volume
setup might
down
be in the
here,
NASDAQ,
looked
I'm going to
like
short the
when this
ES
came down, there was
as the
equal
weaker
buy
of the two.
volume.
So I love seeing cross asset analysis, particularly when they're correlated. You can do the same thing with, you know, currencies like the euro dollar versus you know, the yen or something like that, where you're comparing them, and when you'll a lot of times the yen will be stronger than the euro and vice versa. And then you can do the same thing if the whole market, which is I only trade the dollar pairs because that's the only ones I have futures contracts on. But you know, that's the if the dollar they become all dollar generated or dollar centric.
Let's see how that reacts down here.
But you know, then if you got the
you
know, the yen is weaker, I'm going to short the yen with a obviously a sell signal versus shorting the euro with a sell signal.
Yeah, that's kind of what I look at in the currencies. I mean, you know, if something's correlated too highly, I'll try to just pick the best one. But heck, I know guys that will kind of dollar cost average on, like, if you got 2 or 3 that are correlated, they'll just take smaller positions on all 3 of them, all 2 or 3 of them. You know, just to kind of give, not to put all your eggs in one basket, but just to kind of spread out the risk. So yeah, that's one way of doing it. I don't personally do it, but yeah, definitely keep an eye on the correlations and try not to
Order
double up
filled.
Order filled.
Gotcha.
Is it going to rise up?
All right, so
one way to eat Reese's.
what I'm looking at, crude oil. Geez, I could probably show you this, but it looks pretty nasty.
Looks like it's moving up. It's going to take
Weekly should be on the daily.
from the morning that we gambled on.
But we've done pretty well since the beginning of June, sort of like anticipating price taking out these lower highs here, which formed part of what I still assume was some sort of a descending triangle. So in a bigger picture, I like also try to, try to figure out maybe from a pattern perspective, sometimes a bit of Elliott wave, which direction price might be heading into. But clearly yesterday, we can go to a lower time frame. We had that Sunday gap and immediately price starts selling off again. So I was watching this yesterday and I was just like, oh no, it might just find support. This is just like temporarily. But when I woke up this morning, it just continuously kept going down.
And I gotta tell you, Richard, I don't know how you trade oil. I sit down with the macro and I can go pro con, and I just am like, there's so many unknowns. I don't know how you trade it.
But then Troy, then again, it's like, I won't hold swing positions in this at all.
Stop filled.
Just day trading.
Stop filled, yeah.
But I won't use the same strategy that I showed you there on the NASDAQ at all. What I like to do with crude oil is it respects market geometry pretty well. I mean, see how it's been following this pitchfork to the upside.
Well, that's that.
Mm-hmm.
I don't think we're gonna
And sometimes, you're a bit late drawing your lines, seeing where price might be moving into, whatever the case might be. But if you, for example, want to take let's say now you believe crude oil's going down even more, although I don't think that's going to be the case, but whatever. I might be trying to short it towards this lower red warning line here, around 63.72. That's a potential. Or wait for price to hit it. If you get some sort of reaction to the upside, could be good for $200, $300 in the trade there very quickly. So yeah, I do treat the crude oil with quite a lot of caution, I must say. But I think NASDAQ's also quite a bit of a beast, right? When it gets going, it can whip you pretty well.
Yes, very true. And and if you're really gonna pick on NASDAQ, the liquidity is way better in crude oil.
Yeah.
Look, I mean, I'm looking at the NASDAQ right now on the September contract. It's got 2 contracts on the bid and 2 contracts on the offer. I mean, that's not a lot of liquidity, right?
Yeah.
Whereas at least crude's got 10 or 15 contracts on the bid.
Look, sometimes you have to think out of the box. What's crude doing now? To me, maybe it's pulling, forming a little triangle.
Let's see what happens here.
With some more downside potential. I would say potentially another low towards that red line I've shown you on the higher time frame. So we're sitting here with a pretty large fair value gap. And this is on a 5-minute now, guys. So very short time frames here. Let's make that red.
Lots of buy volume.
Pretty large fair value gap, but price already pulled into that. Trying to go lower down. But that being said, I would like to see something like this.
We'll probably put it into that.
Like an ABC or a zigzag type of formation. Maybe a bit deeper into this fair value gap. And then see if I can get a reaction lower. Maybe a bearish
see if we can figure out how to trade the
fair value gap forming on a 5-minute to the downside. Then, maybe jump into a trade and take a stab at it. But then again, it will just be short term. I'm not holding this overnight. Be in it and want to be out of it pretty fast.
Yeah.
So that's my expectation here. Maybe slightly higher. I'm using a different platform now. Around about here between a 50 and a 61.8 flip ratios, and then see if I can get a decline.
Don't know if that affects us at all.
Or some sort of reaction from it. So, I mean, this might be it, and it continues lower. Who knows? But
don't you think that the kind of the core success of trading is to be able to quote see the pattern?
Yeah. see the pattern. Maybe like you mentioned in the beginning, see what everyone else is seeing, and anticipating what they might be doing. But I've also learned so many times, like they might be looking at FIP retracement levels. If you're looking at triangles and Elliott wave analysis, for example, you typically have 5 waves in a triangle. I actually don't like drawing on this platform. Maybe bearish moved lower, A, B, C, D, E. Maybe I'm completely wrong about it. But if we get an E wave there and we get then a decline that terminates, where does it typically end? They typically end at your FIB ratio. Everyone's watching those, especially when they're dealing with triangles. Normally your 50%, 61.8% FIB ratios. And yeah, see if you can take a short from there. But you're right. I mean, it's like, what's everyone else looking at? Especially those pattern traders,
I don't like how much.
Yeah, it's good to step in their shoes just to see what they're doing.
Well, and then if they're anticipating something and it doesn't happen, that's where, to me, that's where the opportunity comes in. Is when is not going with them. It's when they're wrong.
Exactly.
Yeah.
They're creating that liquidity for us all.
Yeah. Well, I just find the whole discussion of oil extraordinarily difficult because you got the U.S. side is screaming, drill, baby, drill. You've got Russia, who
makes me feel like
has got to have a massive amount of excess capacity because they're being squeezed.
Yeah.
So there's a huge, maybe it's not even a backlog. You can't say it's been pumped already, but you have this huge need to generate hard currency from Russia, who is, basically has been shut off from being able to sell their crude to the most part. And then you have OPEC, which has increased their quotas by 400,000 barrels a day or whatever it is through June or July. I guess it's through July now, August. And it's like there's so many different pieces to this. You've got,
maybe we take it out.
We've got Iran that's basically been shut down from a exporting capability. So you have all this areas of excessive amounts of oil ready to go on the market at a peacetime revelation, right? So. I agree with you. The downside is the side I want to be on with oil. That being said, one ballistic missile into the strait,
take a look real quick.
And we're going to see $100 oil.
Here we go.
20% of the oil supply, worldwide oil supply, comes through that area.
Let's go.
And
hopefully it does.
I don't care how much the U.S. drills, we're not going to be able to make up that difference.
The strategy here.
And probably most other countries that produce oil can't. We don't have that much excess capacity to put in place. So in the short run, that's a scary. That's the bull side. I think that we've seen Saudi Arabia do this multiple times over time. Is when the U.S. starts getting aggressive with drilling, they increase supply.
Like you wanted to see this
to try to lower price to where it's not economically feasible for us.
Come back down
at $100 a barrel, every crappy well in the U.S. is being sucked dry. I mean, because our cost is $50 or $60 a barrel, so above 70 or 80, it's worth going to these crappy wells and right? So it makes sense. But you'll see Saudi Arabia. I always get cracked up because we start seeing, when we see price go up to $100, man, every wildcat, South Dakota, North Dakota, man, the Baltics, the Baltic Basin in Texas, man, those guys are pushing, they're extracting every ounce of oil they can at those prices. So what's going on? I mean, if the OPEC starts to suppress, but then Russia comes online, Iran comes online. You know, some of these others that have been beat up in a long time, Syria, Iraq, you know, have not had capacity, but those capacities are coming on as they are ramping up. You know, post U.S. Iraq, they're adding capacity to their oil, right? It's only going to get more and more. That comes on board, then you're thinking, oh man, there's a supply glut. We'll see that. It's just but at the same time, you're going, okay, if the price goes below 60, every spigot in the U.S. gets turned off because it's not economically feasible. So then, you know, I get so confused talking it out. What do I want to do? Go long, go short? You know, right? I mean, because there's a legitimate story for both.
Yeah.
Makes you wonder what the big banks and institutions know, because they did actually increase their, according to the COT report last week. I mean, they increased their long percentage by about 4.5%. It looks like. Same thing with the Canada dollar and South Africa. You know, obviously correlated to oil. So, yeah, they feel pretty good about it. But yeah, I agree. It's just so tough right now with the oil. I mean, I'm showing a neutral rating based off of all the economic reports I was talking about earlier. It's like literally perfectly neutral. So at this point, it might just be a technical play. Get that deep pullback. And
well, I mean, and you got to do like Richard, and you play the short-term move. You know, and really, does the fundamentals matter in a short-term move?
Right. No, exactly. Nope.
Doesn't. And to be honest, you know, as hard as it might be, if, you know, on the pockets of, I mean, everyone globally, when crude oil gets more expensive, you know, at least I sleep at night not worrying about that ballistic missile. You know, it's like I want to be in it, I want to be out of it, and I just don't want to go to bed knowing I've got an open position.
Yeah, it's been definitely scary the last couple of weeks.
Yeah,
I'm normally fine with it, but no, it's just been a little too crazy the last couple of weeks.
Yeah.
I mean, I got into a really good trade 2 Fridays ago on euro dollar, and that was right at the start of the war. I'm like, yeah, I closed it out before intraday end, and glad I did, because it sure went against me. It just closed it out for a small gain, but like, yeah, it's just too much risk. Slippage and all that, gapping, everything. No thanks.
Target
I've turned
filled.
into an intraday trader real quick.
Yeah. Right, guys, we've got about 15, 17 minutes left still.
Well, I did take
we
a
took a
small
little bit.
stab at gold.
We should have.
You want to show us?
I mean,
are you
not
still in
kept
it?
But we should have.
Yeah.
Took profit.
Yeah, let me
Please
just
do. Please do.
sure.
Please do.
Chase
Flip on over.
But there you go. That's how you do it.
Shit.
That's how you take the range. We could leave that in because it is probably going to
Just
drop.
took a small stab at this, so let me wait for that to come up.
Yeah, there you're on. Maybe talk us through that.
Yeah, so this is gold. So yeah, just back to looking at my fundamentals. I mean, it was giving me a pretty bullish score. Obviously, the COT report favors it. Retail positioning, seasonality, the inflation reports as well. So that's the one that I essentially missed last week. So like I said, I was asleep during that time, so I missed it on the first go around. It just barely touched before it flew up. So I just decided to take another small stab at it because it did come back a second time. Now, normally I don't.
Is that the new Hola Prime platform they're using?
What's that? I'm sorry. She has. No, so she's working on getting my ID so I can get created with it. Yeah. So I'm just using another one right now. But yeah,
nice.
Anyway, it's come back and touched my demand zone again. Now, the only reason I'm interested in taking a second stab at this is because it's still within the overall daily, which is the yellow, and then the 4 hour. Yeah. When it touched it the first time, it bounced immediately. Like it didn't mitigate in too deep.
Right.
So
that's how we trade the range, guys.
I'm thinking that there's probably going to be some more unfilled orders
Small
left in
wins.
there, and then obviously the rest of
We're
the
just
bottom of
moving along.
the daily
Moving along,
demand
we're
zone.
almost
So,
at.
yeah, I just went ahead and took a
the
stab at that,
1/6
and then we'll just chase the
range
top up here, see how that goes.
of
Stop
trade.
loss below the daily.
We might take more trades. We don't know. We might just
We'll see
leave
how
this
that
in
rolls.
Yeah.
As you can see, we killed it there yesterday. That was,
And then really the only other one I
1/6.
was watching at the moment, I'll just flip
we
over
did take
to my
60
other
bucks here. We're good.
chart.
We're almost back to actually the break
Always
even starting.
You got to
so
change the screens
crazy.
each time. Let's see here.
Peace,
Stop
all the
screen.
loves, and